What's up, everyone? It's Scotty with Money Investing. Tesla here once again cutting prices on its vehicles, and this time in Europe, parts of Europe, France, Germany, and we also got Singapore and Israel. And the price cuts are somewhere between, I would say, 4 and 10%. I'm going to break down the article here in just a minute, but they've got earnings coming out next week, and April 19th is when they are reporting for the first quarter 2023 fiscal year. So it's going to be quite an interesting time. I'm going to go over, what my expectations are in a video leading up to the earnings. So we'll talk a little bit about that over the weekend. But Tesla here closing in just dead center at 185, down about 0.5% on the day, consolidating sideways for quite some time between that symmetrical triangle, which we'll also break down. But anyway, if you guys enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below. And you get access to all the buy and sell alerts, options alerts, trade ideas, all the other member benefits, including private videos as well. And there is a 16% annual discount available to take advantage of till the end of this month. So this right here is Tesla. Again, the price action is very much sideways. So we have seen, of course, a brutal 2022 for Tesla when it sold off close to, I think, 70% from its highs. So all-time highs obviously still stay put at close to over $402 a share. We are still down a little bit over 56% from those prices. This right here was the entire sell-off beginning in January of 22. And we at one point we're down 74%, but right now we're still down about 55% from those highs. And we have also seen a very significant rally for Tesla from low 100s all the way up to $212, $215 per share, up over 120%, and now just trading sideways in that range, consolidating. Tesla cutting its EV prices in Europe, Singapore, and Israel in pivot to drive sales. So reading further, you'll notice that Tesla on Friday slashed prices for its electric vehicles in Europe, Israel, and Singapore, expanding a global discount drive. It began in China in January while raising concerns about its industry-leading profit margins. So we do have Tesla at substantially higher margins, right? Over 18, 19, even as high as 20% automotive margins for the company, which is incredibly, incredibly good. And that is really, it's kind of difficult now. Like, how many price cuts have they already done? It has to have some effect on profit margins. It's just, if it doesn't, well, I'm going to be shocked if it doesn't. Like, if the actual earnings come out and we don't see a margin compression, my hat's off to Elon Musk in that scenario. And if they're able to maintain these margins while cutting prices, cost has gone down as well, right? So you have to keep that in mind. We have seen lithium prices come down. We have seen a lot of other commodities prices roll over. So it's possible that Tesla's margins remain stable. It is very much a possibility. If that's the case, Tesla is going to absolutely kill the competition. No doubt about it, because they are lowering the price for extremely high-end electric vehicles, and Tesla is still considered as more of a luxury vehicle. It's not really something that the average person can really afford just yet. Of course, with these price cuts, it's going to get more and more affordable, but if they are able to maintain these margins, I can, with a lot of certainty, assume that Tesla stock is going to absolutely go through the roof and break past $200 per share after the earnings come out, if the margins remain stable. And better yet, if they grow, man, we are looking for some decent, juicy gains on that day if Tesla margins remain. But again, reading further, you'll notice Tesla last week reported first quarter deliveries were just up 4% from a previous quarter. Despite offering discounts in the US, China, Japan, Australia, and South Korea, aimed at spurring demand. And days after releasing the delivery data, they mentioned disappointing, which I don't think Tesla's deliveries were anyhow disappointing. They beat expectations. Tesla announced its fifth vehicle price reduction this year in the US, and as Washington prepares to introduce tougher standards that will limit EV tax credits. And this right here, on Friday, they said they're cutting prices in numerous European markets, including Germany and France, because of scaling up and improvements in its production capacity. And in Germany, Tesla has lowered the price of its Model 3 and Model Y vehicles between 4.5% to 9.8%. Data on its website showed on Friday. And in Singapore, it cuts its price on Model 3 and Model Y vehicles between 4.3% and 5%. And Tesla also cut prices in Israel, with the price of the base rear-wheel drive Model 3 slashed by 25% after the initial round of global price cuts, I believe in China, I believe what is. But anyway, so this, again, Musk has said Tesla would focus on bringing prices down to drive demand and has been successful in sparking orders with January discount. In the US, Tesla has cut prices of its base Model 3 and by a cumulative 11% since the start of this year, with a 20% reduction on its base Model Y. So these are pretty substantial, reductions. And again, margins are going to be key going into these earnings calls. But I want to, again, address that just because prices are coming down doesn't necessarily mean the margins are going to compress. We also have to take a look at the cost side of the equation, which again, prices have been coming down for commodities. That's one of the reasons why inflation's been rolling over. So PPI, right? Those prices. And Elon Musk has been saying it vocally for quite some time on Twitter that he's seeing a lot of prices coming down. In fact, he sees deflation, and he's been very vocal with Cathie Wood that the Federal Reserve should actually stop raising rates and should cut rates. He's mentioned that. I think his estimate was a rate cut of 50 basis points, something as crazy as like that. So he's been very vocal about cutting rates because he does see deflation in the economy, and he also obviously has a far better insight into what's actually going on with commodity prices. So it's possible that because of costs coming down, lithium prices and everything, all the parts that Tesla uses, prices coming down, aluminum, steel, all those things, prices coming down. And as a result, we are seeing these price cuts, not only to spur demand, but also to absolutely crush the competition. And if margins can stay steady, it is game over. It is game over for all other OEMs if margins are steady and they're good. But this right here is going to be the technical analysis. So we do have a lot of analysis here. So again, we've kind of been trading in this widening wedge pattern for Tesla for quite some time. Again, from highs of 410 all the way down to as low as $75, $100 per share. So we've been trading kind of like in that downtrending channel. And more recently, though, we have pushed up, but we are now starting to consolidate sideways. So we are very much in this symmetrical triangle where Tesla is kind of validating this higher low. So we're consistently validating that support, but at the same time, we're also validating this lower high. So we're not really moving all that much higher or lower, but instead just trading in that sideways consolidation symmetrical triangle. So eventually there's a possibility that Tesla breaks with a huge move. And there is going to be a huge move coming up very soon because we are once again consolidating. And the sooner we kind of finish that symmetrical triangle, which is going to be probably around earnings, it's possible that we see another move back up, then it's going to be the big judgment day. And if margins are steady, it's possible that we break to the upside past $200 per share, possibly even past $225 for Tesla to break to the upside and break out, pushing past as high as $250, $260s are going to be some next targets to watch. But of course, everything depends and rides on margins. If margins are, not holding up to what we're expecting, then it's possible that we break below 175. And of course, guidance is also what's going to matter. And whether Tesla can deliver 1.7 to 1.8 million vehicles, better yet, 2 million vehicles for us to see a gain of about 50% on a year-over-year basis. Support level is going to stay put at 175, 160s. Resistance at $210, $225. And my plan is very simple. Breaks down, cash secured puts all the way. Breaks out, covered calls all the way. So that is going to be a very simple plan. That's what I'm following right now. And again, we've been able to take advantage of this volatility with Tesla. And the next option, I'm going to be very precise with the strike price, with the expiration, so that we can get a lot of premium. We can get that nice return on collateral for Tesla as well. So hope you guys enjoyed this video and a complete update on a Tesla. Let me know your thoughts down in the comment section below. What do you think about Tesla right now in terms of profit margins and what type of earnings can we expect from the company? So let me know in the comment section below. As always, if you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, link to our Discord page down below. 16% annual discount available till the end of this month. As always, happy investing. I'll see you all in the next video.